Be Wealthy and Smart, episode 1360.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is the Fed easing near? Meaning the cutting of interest rates that we've been talking about since last year, when markets priced in 6 interest rate cuts. But since then, the Fed has not gotten the inflation numbers in the range of 2%, which is what they want to see before they cut interest rates. But recently, we had some good data where now speculators are saying there might be a good chance of finally seeing a rate cut from the Fed. But first, you should know that the S&P 500 and the NASDAQ made record closing highs on Wednesday. And that was mainly due to technology stocks that have been very strong lately. In terms of economic data, the May private payrolls report came out on Wednesday, and it was the latest data to suggest an easing in the labor market. And that opened the possibility for the Fed to begin cutting rates this year. Also, a report on Tuesday showed job openings fell in April to the lowest level in more than 3 years. Jack Jancewicz, a portfolio manager at Natixis Investment Managers in Boston, said, "We're seeing the economic data starting to ease up a little bit, and the repercussions for that is that you're seeing the pressure on rates come off the boil a little bit, mixed in with the potential for weaker economic data, which is a pretty good recipe for the bond market." And what we see now is traders are pricing in nearly a 69% chance of a September rate cut, according to the CME's FedWatch tool. Prior to that, expectations had been around 50% for a rate cut in September. So from 50% to 69%, definitely looking like the data has been moving in the right direction that may allow the Fed to make that cut. The 10-year Treasury yields fell to a 2-month low on Wednesday in anticipation of all of this, and after a report pointed to weaker than expected job growth ahead of today's highly anticipated government employment report for May. According to Ed Clissold, chief U.S. strategist for Ned Davis Research, there's not a lot of reasons to get off what has been so far a really good year. The Q1 earnings season is wrapping up with over 80% of companies beating estimates. It looks like Q2 is going to have an acceleration in earnings growth. We're looking at economic slowdown, no immediate recession. The excessive optimism we saw in March has been largely worked off. For the most part, it's a bull market until proven otherwise, he said. Now, what's interesting is the European Central Bank on Thursday did cut rates for the first time since 2019, so that adds a little bit of pressure to the Fed to maybe lighten up on their policy. The Fed's next meeting to give a decision is in the June 11th to 12th policy meeting. Year to date, the NASDAQ is up 14.38%, the S&P 500 is up 12.49%, and the Dow is up 3.31%. So really, the NASDAQ and the S&P are up for a full year's average returns in the first less than 6 months of this year. So even though we haven't gotten the interest rate cuts and inflation has still been stubbornly high, the markets have been performing exceedingly well. But the report that we get today, which is the monthly U.S. jobs report, is going to give us further signs whether there's a cooling in the labor market or whether things are still running a little hot. Economists generally think that there's going to be a modest uptick from the prior month. But as I said, markets are pricing in a 69 to 70% chance that the Fed will start to cut rates 25 basis points or 0.25% in September. So we'll see what happens and continue to report back to you. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.